property. So an agent will write a contract for someone buying an investment property. The seller's going to pay $5,000, but the house is a $100,000 house. Well, now we've got to renegotiate $3,000 worth of money because they can't pay that much.
So is the non-applicable on the VA, that actually means because VA doesn't fund a second home, is that right? It's
That's
just
correct.
a primary home?
Yeah. Same with USDA. I would not tell you to pay attention to that. That's really a one-off situation that probably nobody in this room will ever see an FHA second home purchase. I've never seen one, ever. And I've read through it, but it's a really unique set of circumstances.
And would you say, like, when you're asking for closing costs, take conventional out of it? Yes, you can ask for 6%, but do the math and then look at reality.
Mm-hmm.
Because, you know, your 6% might be something stupid, like 16 grand or something. Don't write that, for the love of God. Don't
Right.
put
I mean,
something like that.
you know, the best thing to do is get with your, whatever loan officer you're working with, send them that MLS sheet. Hey, dude, can you shoot me a worksheet on this?
Yeah.
We're gonna ask for some seller pays. Because you don't wanna over ask and then you can't use all the money. Now you've done your buyer a disservice. You don't wanna under ask because what if your buyer doesn't have any money? So send them the MLS sheet, tell them to do you a worksheet. And people always wanna, or the most common question I get is, what percentage of the purchase price are closing costs? It's not. Every home has different taxes. We talked about it earlier with Dustin. Tax rates change all over the place. So you can't assign a percentage rate to a purchase price and say that's gonna cover closing. It also matters when in the year you're closing. Let's say you write a contract today, it's gonna close in March. Well, we close it in March, that buyer doesn't make their first payment until May 1st. They make one payment May 1st, one payment June 1st, and Davidson County tax bill's due in July. So now we gotta collect all this additional escrow because they're only gonna make 2 payments before we gotta pay Davidson County 12 months of taxes. So it's not, you can't use a set percentage. You really need your loan officer to put together that worksheet if you're gonna ask for seller pays. So that you're doing your client the best service and not shortchanging them or leaving money on the table.
Repair, like, so if you ask for money for repairs, to go to like a contractor or something, is that included in the seller pays, or is that?
It is not if it's repairs.
Okay.
And that's a whole other conversation, but I mean, seasoned agents, and Dustin Bonnie will tell you, when you're doing that, make sure you're talking to your loan officer and making sure that that check's gonna be cut to that vendor at closing, because that just makes everybody's life a lot easier. And if not, you're better off to do your addendum for seller paid closing costs instead of repairs, because depending on the loan product, they can get pretty sticky on what they're gonna allow you to do and not allow you to do. Does that make sense? Any other questions about this? All right, this is a great one too. Who thinks FHA requires a termite inspection? That's awesome, you guys heard that. All right, so FHA doesn't, and we hear that all the time. Well, I mean, FHA, you don't have to have a termite inspection unless the appraiser sees damage, termite damage, you know, in inspection. This tells you all the inspections needed for each loan product type. Where you guys are, probably USDA is going to be your most active for inspections. You know, the water tests, the septic, you don't necessarily have to have that. And if the appraiser goes out and there's doo-doo in the yard, yeah, you're gonna have one, but if not, I mean, you don't have to have a septic either. So, this is a great tool to use every single time if you want to, until you're used to just what you need. I'm not telling you not to recommend these inspections, but I'm telling you that a lender does not need some of these to approve that loan. You're always protecting your client if you're getting these inspections, but we do have some clients who are short on funds or want them to get in their house and they may not have money for a septic inspection on a USDA loan.
Is that where, if you're getting some seller paid closing costs, see if the inspector will hold it till closing, so the invoice gets paid there? So they're not coming out of pocket more money?
With seller paid closing costs, it's always good, again, to have a conversation with your loan officer about, here's what I'm recommending to the client, here's what they're agreeing to. That way we can put that in and make sure that you're asking for enough. Because when I do a worksheet, I'm not adding in any inspections that the loan doesn't require. Because if the loan doesn't require it, we don't disclose it as a lender, right? If it's, and usually on the front end, we're not disclosing because we don't have an appraisal at that point. We may or may not know it has a septic or a well. A lot of that comes after the fact. If you guys send us an MLS sheet, we're sure now we know. But if we don't, we won't know until we get the appraisal. And that can impact some borrowers who are tight on cash, especially with USDA. Most of those folks have just enough funds to get through.
So if it's an inspection that's required, how old can that inspection be? Like, has it gotta be brand new?
Not necessarily, but each one of these has their restrictions on age, and they're not all the same. So if you're using a prior inspection, go ahead and send it to me or your lender and let them review the date and what's on that inspection before they submit it in to underwrite.
Depending on what kind of home inspection is, send it to me, Dustin, or Mike, before you send it to the lender.
Well, depending on your lender, right? If you send it
Yeah.
to me, it's not, if I see something, I'm gonna.
Yeah. Yeah.
But, yeah, I mean, I'd say, yeah, that's probably, probably a better idea. One of the things I wanna point out is none of this is specific to manufactured housing. And anytime you get into manufactured housing, you must have a structural engineer inspection except for VA. So if you're doing manufactured homes or, listing one or selling one, if you're listing one, I always tell you, get Foundations Plus out there. It's gonna cost $75. They're gonna tell you whether it's good or not, and you know before you ever put it on the market, right? If not, your buyer, you can use whoever you want to. I'll tell you, I've been doing manufactured for 13 years. Foundations Plus is really good, unless you have a really good engineer that you're friends with and they know how to put the verbiage on there.
Now with the Foundations Plus, like if you list the manufacturer and then the buyer needs to get their own inspection done by an engineer, would they be able to use the one that you, the seller, already got, or they have to get their own?
Nope, they can use the one the seller already got. Foundations Plus will do $75 charge to tell you whether or not it's okay. They will not issue the certificate until you pay them the full amount, which is the $425 or $450, something like that. But that structural engineer certificate is good for that property for a specific period of time, again, depending on the loan product.
I have a question. I know, like, the one we just finished with Cameron.
Yeah.
Okay, so, his initial pre-approval was not for manufactured. So then we found the manufactured and you kind of reworked it for me. Does the down payment, is that always higher for manufactured? Or was that just
No.
like a person difference?
If it's a conventional mortgage, it may be higher, because not everybody's gonna fit the home possible, home ready, whatever. And so then they're gonna need a minimum of 5% down.
Okay.
With FHA, it doesn't matter. It's 3.5% regardless of manufactured or not. VA, it's 100%. You can't use you can't do existing manufactured on USDA, so that's not even a conversation. If you didn't know that, if you see an MLS listing and it's a manufactured home that says USDA, no, that listing agent doesn't know what they're doing.
And if it says modular, make sure it's not manufactured.
Correct. There is a huge difference.
Now, how's the best way to handle that, like, you know, that was like one of my first ones, so I
Yeah,
didn't.
you had a good one to start with.
You know, I didn't realize it was gonna be so different. Thankfully, it all worked out. So should we contact you or the lender or whoever to get a new worksheet before we put in an offer, just to make sure everything works? Is that what you would suggest doing?
Yes, because there's still a lot of lenders who won't lend on manufactured housing.
Okay.
There's still some out there, you know. So yes, if you get a pre-approval letter and your buyer hasn't talked to the lender about manufactured housing as an option, go back to them before you ever make that offer and make sure everything's kosher.
Okay.
Yeah.
Like, I know you're easy, like, you're quick to respond to, but like, if this was like over a weekend, you know, in this market, like, sometimes it's like highest and best by tomorrow, you know what I mean? Like,
Yeah.
I just didn't know how that was,
I mean,
like, you personally, well, you know, you're quick to answer, but some of these
Right.
other lenders may not answer till next Tuesday, you know what I'm saying?
right.
I just wanted to, I didn't know if that,
You would have to tell your buyer. Yeah, you can tell them that. I'm okay with that. I mean, you'd have to tell them that their due diligence money's on the line.
yeah.
They may reach out to their lender on Monday and Tuesday or whenever they're back and find out they can't
Cause
do
like,
it.
thankfully theirs worked out, but it was, you know, it was cutting it close, so
Right.
I mean, you know, it may or may not have, and Destiny's like, you need to make sure that that's gonna work.
Yeah, I mean, it is a different animal, all right? It's,
Okay.
you know, it's treated differently by every single agency. We were just talking, Bonnie and I, about the titling of manufactured homes. That gets a little funky, and that can bite you. Everything else can go great, and then you get your title work from the attorney, and then the title was never retired, and the seller doesn't have it, they never got it, and now you gotta do NVR 46 with the DMV, and that takes 3 months. I mean, like, it's a different experience, so don't go into it lightly. I'm not telling you be fearful of it, but just put a lot of consideration in there and make sure you're having a conversation with the lender. Every now and then we run into one where the title wasn't canceled, and it can get tricky, and that's one thing we have to try to protect all of our buyers from, because at that point, I mean, they got, you know, depending on how much due diligence, they may have $1,500, $2,000 already in that transaction by the time you do your structural, you know, any other inspections, your due diligence, your appraisal, and then we find out that the title's lost in space, and, you know, that's tough. And most of those buyers don't have $2,000 to throw away, you know.
Isn't there an age limit on how old the manufacturer can be?
1978, it can't be older than 1978. When you're looking at anything earlier than 2003, 2004, be super careful about getting that structural engineer up front, because people were kind of fly by the seat of their pants prior to that. And a lot of those were set up dry stacked, some of those have no tie downs. They were just kind of rogue in how they were putting them out there. So, and all that stuff can be fixed though, right? As long as the seller's willing to take care of it. Anything else on inspections? These are just common. I put a few slides in about appraisal, repairs, and inspections. These are some of the most common you see for each different loan type. You know, this is pretty relevant now with you guys, especially when you're trying to win a deal with multiple offers. You know, everybody wants conventional or cash, just because the other three can get a little more tricky. USDA is honestly not that bad. It follows, for the appraisal side of it, it kind of follows conventional, but sometimes we see a few extra things on USDA. But that's just a generic list. I've done another slide. Oh, this is just a kind of... That's my favorite video right now. I love that cat. Okay, well, you get to enjoy this for 20 seconds more. I had to break it up, y'all. This stuff gets so boring. Like, what is it called? I sing that song all the time, like in my head. I don't know why, but that song just was like. Anyway, all right. So if you're doing an FHA, VA, this is what that appraiser is primarily looking for, right? That's not every item, but that is like 90% of what they're out there poking around for. If you're on the listing side, go ahead and tell your seller, hey man, get this stuff fixed, because if they don't have that stuff fixed, then, you know.
You said FHA and VA?
Mm-hmm.
Are most of these on the USDA too as well, but.
There's a mixture, right? So USDA is a combination of a conventional loan and a Govy loan. It's a really odd character. So with USDA, it'll be okay with some stuff that's on this list, and then some stuff it won't. I don't have one that's, I don't
That
think.
stuff's always listed on the appraisal, right?
Yes, yeah. I don't have one that's specific to USDA. These are the top 10 that you're gonna see on a FHA. The other one was top 10 of all of them, or most common of all. These are the top 10 we see on FHA. Peeling paint, y'all, I mean, it's like, I swear, can people just scrape it and slap something on it, but it is what it is.
Where's your office at?
My office is one in Greensboro on Green Valley and one in High Point, and Burlington too. We've got one on Forestdale, so I work between all three of those.
And you do everything around here too?
Mhm. Yeah. Y'all, with COVID, I mean, it's rare I see a client. I mean, it just is, because the attorneys don't want us at closings anymore. You know, and folks don't really want to come into the office, and everything we do on the front end now is collecting pay stubs and bank statements and W-2s when the customer does applications, so we just spend a lot of time on the phone chatting it up, and we don't really ever see them. You know, before all this, we were going to closings, and it's a lot different kind of connection. So, disregard this. I put this in there because this is what I'm sending your clients. The do's and don'ts, right? And we still have people that do all the don'ts. And, you know, it is what it is. There's nothing, we can coach them all we want to, but you can't control what somebody does. But just know that these are the things that I'm talking to the client about, right? I mean, and you still have people who are going to do their own thing. We try to protect as much as we can against that, but you know, we have folks that decide they're going to quit their job 3 days before closing, or they, you know, going on furlough, or you know, just buy that new car. You hear all the stories. But know that we're out there talking to them, trying to let them know, hey, please don't do this stuff, right? But they're gonna do what they're gonna do.
Wait till after closing.
Right. Yeah,
Then do whatever
literally,
you want.
literally, as soon as you get the keys in your hand, go do what you wanna do, right? But don't, you know, quit your job and then try to go back to your employer and get rehired the day of closing. I mean, we do an employment verification within 72 hours of closing. And we ask, is the borrower still, you know, working the same number of hours? Or, well, first we ask, are they still employed? But then, is your borrower still working the same number of hours? And if they're not, they've cut back to part-time, or, you know, something. A lot of times we're screwed, we're scrambling.
Does it make a difference if, so I have a client that's USDA and he works for the railroad, and with COVID, they've been picking up their hours a lot. So would that matter if he was to pick up more? in that time frame?
USDA requires us to do this, really crazy Excel spreadsheet workbook. And we have to get their last pay stub from 2019, their last pay stub from 2020, or we have to go directly to the employer, and then their year to date. We have to put in all this, we have to break down every pay type, how much of that they made in 2019, how much in 2020, and how much in 2021, and it tells us, it spits out a number and says, here's your income.
Okay.
If they're working more hours, it's gonna help, but we're not gonna, if they were working furlough and now they're back to full-time, USDA is still not open to us using 40 hours times the rate of pay yet.
Okay, gotcha.
I think that'll change sometime this year as COVID, gets less impactful. But right now, they're still making this they call it variable income, and we have to do this FHA is doing the same thing. We
Okay.
have to do this big calculation.
I had someone that did pick up extra hours and stuff, and then they priced out of USDA. So that was their biggest thing, is that then they became over the max limit or whatever. So that would be like my only concern with them having more hours, depending on what their income is.
I mean,
They're already.
y'all, Lyndon's like walking a tight wire with, a case of beer in this hand and a cup on your head, and, it's literally like anything can tip you. So Dustin was talking about the tax reassessments earlier. Y'all, we have attorneys out there, and I'm not gonna name names, but not the ones that we like to endorse, but we have attorneys out there who are now sending us tax estimations that are higher than what the county is charging for taxes. And I went round and round with one 2 weeks ago, and he told me, literally, he said, you're doing a disservice to your client. And I said, my client can't buy this house with your tax estimation, because you've now destroyed their debt to income ratio. Here's the tax bill. Here's the tax card. This hasn't changed, but that attorney estimated based on the new purchase price. No reassessment's been done, nothing. That's how crazy it gets right now. So just be aware of that. Use attorneys you know, not ones you don't know. This is just a little bit about us, so I don't know, anybody who's done a loan with us probably already knows, but we underwrite first. Every other mortgage company I've ever worked for, every other mortgage company out there that I know of, processes a loan first. We believe if we underwrite first, if that loan is not going to work, we either find a solution quicker, we deliver the news quicker. Now we're not wasting everybody's time on a loan that's not going to work. So we just swap the process up, and that's why you'll find out sooner with us if there's a problem than later. Because once we get all the docs, the first place that goes is to the underwriter. Seller's advantage, if you're listing properties, we'd love a shot at getting your buyer or your seller pre-approved for their next purchase. That's all it is. And then our website got revamped, so we are now retaining servicing to every mortgage we do, so your client stays with us unless we change that, which we're not going to, because we just spent a ton of money to do that. So now when they go to my website, they can actually click here to pay their mortgage. This is the most important thing, get them there to do the application, because I can't help them if I can't see what's going on. And just remind people too, a lot of people are really funny about, the dude's gonna see what's going on, I'm just, like, I'm not the referee. I don't care. I mean, I care about them, but I don't care about their circumstances or situations. I'm here to help them figure out, okay, can you get a mortgage or can you not get a mortgage? If you can, here's what we gotta do. I'm not here to judge anybody. I've done loans for all kinds of people. All kinds of people. I don't pass judgment on anybody. But a lot of, especially first-time buyers, still have a fear of, talking to a lender. tell him that's not what he does. He's your coach. He's gonna tell you how to win the game. He's not here to, tell you, that's not what I do, so.
Yeah, that was gonna be one of my questions. So a lot of buyers that I talked to were like, we're still working on our credit, we're not quite ready to do the application. Like, how do we have that conversation? And I like the word coach that you use, like, to get them to go ahead and do the application so that you can see what they're dealing with and how to help them.
If they say they're working on their credit, great. Who's giving you your credit plan? Are you working with a credit counseling agency? If they're not, call Toby. Just talk to him about your credit. And then I can get them to do the application. Because if they say they're working on their credit, some people just think that's paying off collections, which is horrible in most cases, and they're doing more damage than good. Maybe they haven't talked to anybody who knows credit, and some people just aren't gonna do it, But some people, if you ask them specifically, okay, are you using credit counseling? Is someone giving you a plan? Call this guy, he'll help you figure it out, right? Because it's complicated. Credit's complicated. Crazy stuff.
But it can be repaired
Mhm.
when people are not at the 6 or whatever they need to be.
Any credit can be fixed.
Mm-hmm.
It's up to that person to decide they want to fix it and what kind of resources they have available to fix it.
Mhm.
The rest of it is just the time period it takes. And
Okay.
credit counseling services can't do anything more than what me or you or that client can do for themselves. They have no other power. So if they're paying somebody for a service, most of these companies are just taking their money.
Do you, like if they contact you and you tell them like what they need to do to fix their credit, and then it's gonna be several months before they're gonna be at that point, like how bad does that hurt? Like, it doesn't really hurt, cause that's, I think a lot of people have a fear of like, well, I don't want them to pull my credit and ding me even more than it already is.
That's a great question, and you should get on that credit expert call guy next
I
week.
was on my underwriter one last week.
Right. So what they're gonna tell you, or what Jordan will tell you is, hard credit inquiry is gonna hit your credit anywhere from 5 to 15 points, okay, on average. Depending on what the algorithm receives at that moment in time when we press the button, could sway that either way. But my inquiry is only gonna impact 5 to 15 points. What happens is people go out and they apply for a mortgage, and maybe 2 weeks ago they went to buy a car or whatever. That's a different story. The algorithm sees that as non-like types of credit, and it's going to score them negatively based on that, because they're not, in the algorithm's eyes, the way it was designed, they're not being financially responsible by focusing on one credit item at a time. So,
Sorry, go ahead.
Well, I had 2 people I talked to last week who they're all really young, and they were like, well, we're just looking right now, and I asked like, have you been pre-approved? They said no, and so my first suggestion was I sent them an email with your information, and I was like, because you don't want to miss out on a home if it comes on the market,
right.
and you're gonna have to waste time, getting pre-approved and all that. So when they first come to you, if they haven't done anything, you pull, like, what is your first step, I guess? Do you pull their credit first and then go over and then do a loan application?
Well, I review the application first.
So they do have to do an application before you do?
Yes.
This is
Yeah,
probably
because
a
I
question,
can't-
sorry.
I can't pull credit without all their information, social security, birthday, address, all that, and then their consent.
Okay.
So when they do an application, I don't just instantly press the credit button. I go and look at their application, because if I see other things on there that would preclude them from getting a mortgage, forget credit, then the first call I'm gonna make is, hey, you know what? You marked the bankruptcy button. When was your bankruptcy? Oh, Chapter 7 discharged 2 months ago. Well, there's no need for me to pull your credit, right? The second step, if all that looks okay, or a lot of times we get employment history stuff, so I'll call the client first and go, you gave me 2 months of employment history. Have you worked prior to that? Because there's no need for me to pull your credit if we can't make it. Were you in school? What was the situation? But after that, then yes, the next step is pulling the credit, looking it over. If their score is not sufficient or there are challenges there, then I call them, talk to them about what they are and how they're gonna fix it.
I
It's
think
up to
that's
them
like
to
a
do it.
big first step for a lot of young people, and like when they get to you, they're like, okay, this is real, you know what I'm saying? Like,
Yeah.
and then it kinda scares them a little bit, but they can, if they know they
I
can
mean, I'm
talk with
scary.
you first. No, I know. No, but I mean, like, I don't know, but if they know they can have a conversation with you and talk about things before their credit actually gets pulled, I think, like, if I know I can tell them that.
Yeah, and a lot of people call and just, we talk through their stuff. And if it's something, like, if they say something that cues me up, a lot of people actually know what's going on with their credit, believe it or not. And we can talk through that stuff, and there's no need for them to do an application. But a lot of folks that are first timers or younger don't know anything about credit, which is understandable. And the only way I can help them is to get that report. Because without that, I don't know where to guide them or what they need to do.
And what they see online, isn't it true? What they may pull, like with another credit website, could be totally different from what y'all may see when y'all pull it
It
as a
is.
score number.
The closest thing to what what we get is a credit risk algorithm. The closest thing to that is consumer related would be a FICO 2. That's as close as you can get to what we're gonna see. Everything else, not even in the ballpark. I don't care if it's Credit Karma, Credit Wise, I don't care if you go into Experian, Equifax, and TransUnion. Those scores, if you read the fine print, will clearly tell you that's a consumer model or an education model. That is not a risk algorithm. And it's gonna be usually not even in the ballpark. FICO 2 will get them close to what we're gonna see.
Can y'all do vacant land and construction?
Carolina Farm Credit.
Yeah.
Even they're like,
Yeah, no.
no thanks.
Yeah,
I mean, it's
gotten really
find
hard.
hardly anybody.
That market is dried up. There's just no investors for that market. On the back end, you know, we securitize and sell to Fannie or Freddie. They don't want that stuff.
Yeah.
It's a tough market.
I have a lot of captions.
Has anybody had any specific scenarios they want to ask about, or any specific questions, things they've run into that they thought, you know, what the hell, or?
I
nothing?
just had a client just want to look for a small trailer park, and that was quite hairier than I ever dreamed of, because the trailers were really old,
Yeah,
and they actually just backed out. But I'm actually glad you came, because I really didn't know a lot of the answers that they had, so I had to get Dustin on the phone. But that was a hairy situation as to where to go, what to do, and
that would be more of a commercial loan type product, right? Where they're buying a park with multiple units inside, yeah.
they ended up walking away. They didn't want to take on that headache, but
Yeah,
it's
that's,
interesting.
Me either.
sounds tough. Anytime you guys have questions like that, you know, text me, call me, whatever. And I'm just, like I said, I just shoot you straight. I don't candy coat anything. It's just not in my nature. I'm just a straight shooter. So I'll tell you straight up what the deal is. Not a lot I haven't seen. There's still, honestly, there's still every now and then a unique situation that we get. But for the most part, most of what you see on a daily basis, I've run into somewhere along the line. So use that as a resource.
Well, people who were like laid off due to COVID, on that call the other day, if they have a 6-month gap, they have to have a fresh 6 month of new income. So what if it's less than 6 months?
If the gap is less than 6 months, then we can use their base earnings, and again, depending on product type, will determine how long they've got to be back on the new job. But FHA wants them back for at least 30 days. VA,
At the same job, or it can be a new job?
it can be a new job.
Okay.
Yeah. VA is going to be funny because they want to see, did the borrower switch to a different type of position? And they're going to be more strict on that. Conventional's the least strict. Conventional's, if you got a good credit borrower, that's the easiest way to go. Yeah.
I thought that call was very informative the other
I thought
day.
it was a good call too. We got some really good questions on that
Yeah.
call.
It would have been nice to have some of this stuff like some of this paper info in front of me during that call,
Right.
cause they were referencing, you know, the credit scores and all that, and,
Right,
but like you said, I mean, I think you referenced this, is like, the loan
Yeah.
officer should have a lot of paper.
yeah, I mean, they do well at keeping these type of marketing materials for agents, handy. But that call was really good. Tracy Weesey that lady is just crazy smart, like she's seen everything. She's been in the industry so long, and she can answer a question for you just like that. Mark's good too. Mark is fairly new to his position, but he's got a lot of experience too. Yeah, I thought that was a good call. I think that, I'm excited about the appraiser call. I think that credit call is gonna be cool. I just like, Jordan's so smart, like, it's hard for me to follow him, you know, I'm like, can replay what he says like 3 times before I get it, but I think both of those would be good calls for you guys.
Thank you, Toby, for the.
You're welcome, yeah, absolutely. Anything you guys need, give me a shout.
Panda thing that they were putting on.
The what?
Panda, it's like a panda, some kind of. Did y'all see it on the, there was on one of the chats.
That planner thing.
Oh, yes,
That's
yeah,
one.
the digital.
Yeah, is it good?
You have to have the pen on it. That's the only feedback Christy gave me. I lost all my pens.
It's like a dry erase.
So she can't use Zell. I'm just old school, I just write it.
Hey,
in my book.
Yeah.
Yeah,
Destiny.
and I just file
She was
this with all
asking
my
about that
stuff each
Panda
year.
planner
Oh,
thing.
just keep your notebook.
Oh,
Yeah.
Cause you have to keep records. You
I'll
know?
give you mine,
Yeah.
I don't need it.
Overhead, right?
Yeah, yours
I
is
don't
like
use
very
it.
nice.
I used it great
Yeah.
for like
Oh,
a month, or, yeah, that's about it.
yeah. Waste of money.
But I'm not a big planner person
Yeah.
anyways, like, it gets
I
to
love
the
my
point-
planner.
Yeah.
See, I've never been a planner anyways, like, as far as like having
Yeah.
a planner and writing everything out, I just put everything in my phone. So then it got to where I was doing both,
Yeah,
and I was like, this is just too much.
yeah. Gotta
It
pick
was
one.
really great though when I was like planning for like the year and like big picture and like writing out kind of like a,
I think I want a paper planner, like
oh, I
book
use
where you-
Everlance.
to carry with my
Um,
other stuff.
Yeah, I use this for my notes and then I just use my calendar.
As soon as I buy
I
something,
struggle
I do
with the
calendar.
calendar. I'm trying.
Really?
Start using that this year.
I'm so out of it.
Yeah.
My
And
son's
then
15,
I'm like-
so hoping that he
See,
just
and then
teaches
I'm
me
like,
everything he
oh,
knows.
good.
I do that with all your homes, and I'm
Yes, sir, brother.
and I love that.
But, and then your, that's
I don't know
your,
why she enjoys
Because,
this.
yeah,
love
I'm
doing
not
her
sure.
Lisa, did
that's
you-
your laptop.
Yeah,
All we gotta do
And
is
it's
get
just
this,
a Dell.
get somebody.
That's,
to-
oh, I'm sorry, I didn't mean to kick you my phone.
And it does.
It is Microsoft
We'll have our
Surface.
own
Right.
So it's like
Should I
what
say
Brittany
that,
has.
Yeah.
clerk's office? Just say
And you can
everything's
touch the
good?
screen.